The Dongo Kundu Special Economic Zone is steadily moving towards operationalization, with both public and private investments gathering momentum. However, investors have raised concerns that the pace of private sector development is moving faster than the delivery of basic infrastructure required to support industrial operations. While government agencies continue to implement major infrastructure projects within the zone, industry players warn that delays in electricity connectivity, access roads, water supply and sewer systems could slow down investment timelines if not addressed urgently. Investors say that without these essential services, companies may be forced to postpone factory commissioning or incur higher operational costs. The Dongo Kundu is one of Kenya's flagship industrialization projects and has attracted strong interest from logistics companies, manufacturers, and energy investors. Its proximity to the port of Mombasa and key regional transport corridors positions it as a strategic gateway for trade within East and Central Africa. Many investors view the zone as an opportunity to reduce logistics costs and improve efficiency by locating production closer to port facilities. Despite this optimism, several investors say that readiness to invest has not been matched by the availability of basic utilities needed to support industrial activity. Some firms have already secured land and begun preliminary development, but full-scale investment decisions are being delayed until infrastructure gaps are resolved. During a recent visit to Dongo Kundu, Cabinet Secretary for Investments, Trade and Industry Lee Kinyanjui acknowledged the progress made so far, particularly at the Taifa LPG gas storage project. The facility is currently about 80% complete and is expected to become operational within the next 2 months. Storage tanks have already been installed at the site. Kinyanjui said the project will add 30,000 metric tons of liquefied petroleum gas storage and distribution capacity, strengthening energy supply in the region and supporting industrial growth within the zone. A key component of the broader infrastructure plan is the construction of Berth 1 by the Kenya Ports Authority, which is currently at about 6% completion, according to port officials. The berth is designed to directly serve industries operating within the zone, allowing manufacturers to access maritime transport more efficiently and reducing dependence on existing port terminals. Once completed, the berth is expected to improve cargo handling efficiency and strengthen integration between port operations and industrial production. Stakeholders say this will be critical in positioning Dongo Kundu as a competitive logistics and manufacturing hub, serving both domestic and regional markets. However, investors note that while large-scale infrastructure projects such as port facilities are progressing, basic internal infrastructure remains a significant challenge. Delays in power connections, internal road networks, sewer systems, and reliable water supply are cited as major risks to timely investment implementation. Mili Glass, a Mombasa-based manufacturer of glass bottles, containers, and tableware used in the food, beverage, pharmaceutical, and hospitality industries, has already secured land at Dongo Kundu and fenced off the area earmarked for its new plant. The company's move signals confidence in the long-term potential of the project, but investors say actual production timelines will depend on the availability of supporting infrastructure. Some investors have opted to slow down investment commitments until essential services are in place. One investor with a stake in the project, who requested anonymity, said uncertainty around infrastructure timelines remains a concern. According to KPA, supporting infrastructure is still undergoing procurement and implementation processes. Construction of port access roads will be undertaken by the Kenya National Highways Authority and is expected to begin once contractual processes are completed. KPA has indicated that the contractor has already been awarded the project and will mobilize to site after contract signing. Power and water infrastructure projects are also at procurement stages through government agencies, including the Kenya Electricity Transmission Company. Financing support is being provided by the Japan International Cooperation Agency under the broader Mombasa Port Development Project. In 2024, KPA awarded Dongo Kundu Civil and Building Works tender to TOA Corporation. According to information published by the contractor, construction is expected to take approximately 1,156 days, or about 38 months, at a contract value of Kenya shillings 27.7 billion. Despite this progress, investors say timelines remain critical because industrial operations depend on guaranteed utilities. Without reliable electricity, water supply, and transport access, companies face higher costs and operational uncertainty, which can slow investment decisions. Industry expert and warehouse operator George Wachiuri said, while investor interest remains strong, infrastructure delays risk undermining confidence if not addressed quickly. He added that if infrastructure challenges persist, the progress achieved so far could slow down and weaken the broader industrialization agenda linked to Dongo Kundu. Spanning approximately 3,000 acres, the Dongo Kundu SEZ forms a central component of the wider Mombasa Port Development Project, which aims to expand port capacity and strengthen logistics along the northern corridor. The zone is strategically located near the Port of Mombasa, the Mombasa Southern Bypass, the Standard Gauge Railway, and Moi International Airport, making it attractive for export-oriented industries. The zone has been subdivided into several functional areas, including a free port area, enterprise and industrial zones, internal road networks, water distribution infrastructure, and a free trade zone. The free port will be connected to the sea through a dedicated road network and will include multiple berths for general cargo, vehicles, and bulk grain handling facilities. As a duty-free area offering tax incentives, the zone has generated significant interest from investors. Incentives include a corporate income tax rate of 10% for the first 10 years, 15% for the following 10 years, and 30% thereafter. Kenya Ports Authority Managing Director Captain William Ruto said the incentives are expected to drive investment and encourage value addition within the zone. There will be a lot of economic activities and value addition that will take place within the zone. As a duty-free area with other tax-friendly measures, we expect immense enthusiasm from investors who have already started expressing strong interest in our progress, he said in an earlier interview. The long-term vision for Dongo Kundu is to transform Mombasa from a transit-based port city into a value-adding industrial hub serving regional markets including Uganda, Rwanda, Burundi, South Sudan, Eastern Democratic Republic of Congo, and Ethiopia. However, investors say achieving this vision will depend not only on large infrastructure projects, but also on the timely delivery of basic services that allow industries to operate efficiently from the start.